Hi, everybody. Welcome to FinTech Fun Talks. In today's episode, we have an exciting guest. It's Eric McFarland, and he is the head of credit at eCapital. But before we start, for those of you that are just joining, we are a Copper Campus Ads Agency, and we help FinTechs grow by acquiring new clients. So welcome, Eric. We're so happy to have you here today.
Thank you so much, Christy. It's good to see you. Good to talk to you today.
Yeah, you too. Let's start out by having you give us a quick background on yourself and where you are today.
Yeah, happy to. For all your listeners out there, I wholly advocate on hiring consultants, by the way, and contractors like
Nice.
you. It's a fantastic service you provide. I've done that across my career in many ways. In my current role at eCapital, where I'm the head of credit, our mission is to empower companies by accelerating access to capital. And so our goal is really to partner with businesses. And in my role, I'm responsible for all credit decisions, all processes for really commercial finance. So we have a few different segments in our company. We specialize by industry and a couple products. I'm everything that's non-healthcare, non-transportation. Really ends up being a lot of stuff. So the two primary products end up being that most businesses use us for today are invoice financing and supply chain finance.
Okay. Yeah, interesting.
That's a little bit of the background for what I do today. For background for me too, and where I come from, roughly about 15 years spent in business lending roles. So at banks like Bank of America, Silicon Valley Bank, Lions Bank, American Express, good 15 years there. But only in the last about 5 years, I've spent time at FinTechs. So business lending roles at places like Brex, at ARC, and now at current company eCapital. But I've got a background with a degree in finance, a minor in Chinese. I'm a CFA charter holder for those that are interested in that. And then I got a certificate in leadership from Harvard. So been in the space, been around and just love what I do.
That's awesome. And so you mentioned you made a switch about 5 years ago into the business you're in now. And what motivated that change?
So there was a interesting trend happening that I saw over my time in banking. Time at B of A, time at Silicon Valley Bank, American Express. I had seen a lot of things going in a nice trend with a combination of technology and the
Hmm.
willingness to adapt to and adopt technology by businesses. And that combined with lending turned into this kind of new trend we call fintech. So
Yeah.
that's something I saw happening over my time in lending. I thought, you know what, I'm really just what's going on here. It's a curious trend that I can't ignore, can't avoid. And actually, I started losing some of my deals to some fintechs in the space. And I thought, rather than try and beat them, I'm going to join them. So that's when I made the switch over from banking to the fintech space.
Which was a wise decision. Like technology is always moving forward, and you had your eye on that. You were seeing that, hey, this is something that is taking up space and is not going to be going away. So that's awesome. So let's talk about commercial lending a bit. It's notoriously complex and hard to standardize. So why is that? And how have you seen the space evolve in recent years?
Most people understand banking and getting credit from how they interact with a credit card or a bank
Yeah.
they use for personal loans or a mortgage. And a lot of that data kind of ends up being just very similar from person to person. We're often just compared against our FICO scores, which are very comparable. It's just a lot of data that is really similar from Christy to Eric and anyone else of your listeners. Businesses are really just not the same. And so, what I've done across my career, I've looked at a lot of this structured data that's similar in some ways, like financial statements. You think of accounts receivable agings, AP agings, tax returns. You get into the deal of having multiple business units with a company or they operate in different jurisdictions. It ends up being really complex. It's really difficult to standardize across businesses. And so it can be really challenging to say whether I will lend to one company A versus company B. And how am I going to get repaid knowing if they're willing to repay me or able to repay me? And that's the challenge of every business lender is to decide that and to say, well, I should lend to A and not to B.
Yeah.
Yeah, one example of that I'd say is there was a time I remember I was lending to this entrepreneur evaluating his company. He had 10 LLCs that operated under his business, and it was sort of
Wow.
his business. And to have 10 LLCs with all this different information at each of the different LLCs, it made it very difficult to understand that in one picture. It took us some time. I figured it out. But when you have just one company that has all these different legal entities, it makes it challenging. And that
Yeah, it
makes
really
it difficult
can.
to really provide good service.
Everyone wants to automate these days, especially using AI. That's been such a hot topic. So how do you balance automation with that human judgment, especially in these complex type of deals?
Well, it's not easy, Christy. It's not easy. But I'll say one thing that I think I realize is that AI, automation, these kinds of things can be very unique and special tools for lenders these days. And so the client interacting with that can educate themselves about that more. So I'll give an example. As I think about this, I remember lending to a custom ski boot manufacturer, and they would manufacture ski boots for top tier skiers. This is not your run of the mill. It's those people that get their foot formed to and shaped specifically for that, for high performance skiing, high quality. They want a great experience with this, either their performance or for whatever reason. And the traditional lender would just look at previous years of performance and say, looks like great financial information. Here's the financial statements. Here's their taxes. Okay, I could automate that decision. I'll provide you a loan, and we could do that without a human. Some dollar amount, some rules based automation that could provide that.
Yeah.
The challenge with that in this situation, when I was the lender for this, was that the automation would miss some of the wide swings that they would have in demand. I mean, you think of a ski boot manufacturer; they're going to have peak seasons during, pre-skiing and right during ski season.
Yeah.
These guys ran into trouble back in 2011, and had they not really had human judgment, a human in there saying, hey, we could restructure this so that you potentially have higher payments in your peak season and lower payments in your other off season, then we can craft a better solution to provide that service. So that's the difficulty I think that we have with this human judgment mixed with automation, because the moral really should be like, we combine human judgment with best in class tooling and we can get the optimal experience, but it's a challenge still.
It goes to speak to how that human judgment is still going to be needed. Like AI is making great strides, but there are these things that we can do with our human judgment and with all the nuances there that just aren't in AI at this point in time. And will it get there? Maybe, but also maybe not. And that to me, I feel like our jobs are a little bit secure just because of this type of thing that you mentioned.
It's very true. Yeah, it recalls in my mind another example of a lender that I was lending to, and actually a trucking company, that kind of same thing, where we could easily have made very quick decisions around this trucking company to say, here's where we're going to take our model that says we should provide X amount of credit to them under these terms. But the one thing that I remember with this that was missed from that really by model automation was the fact that they had really built in with their customers this fuel surcharge that they could pass on to in the event of gas prices going up.
Yeah.
That was really hard. That would be really hard for a model to pick out in the documentation and the information they shared. It'd be really tough for a model to pick that out today, or even back then when I was doing it, 10 years ago or so. But because of that, it was a feature that I could better assess as a human looking at this, as opposed to a model saying, okay, here's unstructured data, like a contract that really could differentiate these two businesses. One that has these fuel surcharges for a trucking company and another that doesn't. And you could easily compare those two companies. They could look very much the same until gas prices spike. It becomes very untenable for one company that can't afford that. The other one passes it on to customers. So just another example, like it is challenging out there, and humans really can't be replaced yet.
Not as easily as some might think, that's for sure. So I wanted to talk to you a little bit about data collection and the transformation that's happening there. This is another thing where we're seeing a little bit of automation, is that data collection in commercial lending has been manual for such a long time. What has been the tipping point in shifting that toward digital?
I think that's the same trend I saw in why I left banking.
Mhm.
Mostly around the appetite of folks that were willing to take that unstructured or even some structured data and find a way to group it together in different ways that makes it more usable. So I remember this first coming up when back in 2008, when I saw our data science team at Bank of America saying that they could provide model risk scores and ratings for all banks in the US.
Yeah.
And they could do that with the snap of a finger. And I thought it was pretty cool. That was great.
Yeah.
The basis for that really was, though, that they were just using the FFIEC or FDIC data that was out there. A nice pool of data that was very comparable and homogeneous that they could just look to, that was available from the government. They could pull it in and just use it. And it's very similar to another thing I saw across 2015 or so
Mhm.
when I was looking at a company that came and said, we've got this data that we can use to automate decisions for any business in the UK. And they pitched this idea that they could automate this decision and could provide this real time
Hmm.
to businesses within the UK. But that again was based on UK data that was available, like the SEC does for public companies. They have that in the UK for called Companies House, and so anybody really can go out and get private company data out in that market. And that's the kind of thing that has really been available only in certain circumstances, and
Hmm.
not really available for people to kind of make that new decision. So I'd say just having the data available has been one thing to enable that process of people saying, let's make an automated decision or enable commercial lending just be easier, faster, and better. One other thing, aside from just data being available now, which is more so the case given, I'd say, with availability in the cloud, cloud storage, cloud data, just the rise of just OCR and digitization has been massive for the industry. So for those not familiar, your listeners, character recognition or OCR is something that has really helped speed up that decision process. And so the idea that, example of when I was at a lender of mine for SVB, which I don't know if that's a good thing to mention anymore, but um, we used to have clients send us documents, and we'd take that and offshore it to a team that would then work 24/7 to just manually type it in, and then they would
Wow.
send it back to us in a file. Just BPO, clearly taking that data, sending it back and forth. Now it's not the case, really. We don't need to outsource that, given how much leaps and bounds in technology for OCR can then take that data, they can parse out all the different data points within there, and not only do that, but detect for fraud, and then send that data back to a data lake for me to make a decision on with certain data science rules or models or whatever it is. And this was something that I've been using the last 5, 6, 7 years or so. That's really grown significantly. And I know others have tried to tackle this in many ways, but it's just gotten better and better with the idea that hey, we can take this unstructured data, or in this case, documents that's a little more structured, really enabling credit teams to make those decisions faster and faster. And that's really kind of the takeaway for me is it's certainly not the panacea for decision making, but
Hmm.
it's a huge hurdle that has been massive for lending teams like mine to be able to enhance the human judgment, enhance that human decision. But the product clearly still is the key for this.
And it sounds like if I'm putting myself in the shoes of the people who are having to look through all this data, it's helping to streamline it and to create efficiencies where there weren't previously, which is making my role easier.
You're absolutely right. And some will call it the ETL process. And there are many ways in which you can describe how data gets from one place to another. One vendor I've used in the past, they screen scrape everything. And
Yeah.
they I would provide them with a website of a client. And they
Hmm.
could take from that just website alone and take their website, any information on their IP details, everything that's on those officers, grab it from all sorts of social media. They would take it from LinkedIn, from Instagram, and they would take all that unstructured data and then present it in a way then that it's more structured. We can put it in our data lake and make a decision off of really within real time. It's minutes of time it takes to be able to process that kind of stuff. I need to be able to now do that as a lender because as my goal even today I want to provide capital to the right customers who say, I'm willing and able to pay you. And that decision is hard to make. And I want to provide that best experience as a lender to say, they're willing to pay me back. I can tell that because of this data. And we couldn't do that 10, 15 years ago.
Right, and it has changed so much. It's interesting to look back because it doesn't feel like time has changed or that much has happened in that time frame, but really it has. As you were mentioning that data collection, I had a project at one of the companies I worked for, and I came in and we had to keep client files, but they were all paper at the time. And so just being able to pull those in, scan them, have that data pulled in, and now put everything online. It took years, literally years to get that project complete. But whoever put that technology together for us really just saved so much manual data entry. Have to give a shout out to those who put those types of technologies together.
And before you know it, snap of a finger, we'll be in leaps and bounds again. It will just grow.
Absolutely. That's the fun thing about technology. Like we're always reaching for something new and better and more efficient. Brex has made waves in fintech. What specific technologies or processes are you most excited about there right now?
Rex has done a lot of things that helped me get up to speed in the fintech space. I wanted this first class experience moving from banks and traditional lending to how FinTech does it. And Brex, I think, is world class in that space. And I'll give one example. One thing they did that I think is pretty neat when I joined was they were kind of an early adopter in really investing in transaction categorization, really making that a first class experience. It's one that I think was already existing in the marketplace. It's not like this was a new idea, but really they doubled down to say, how can we tell this great story of recurring revenue from this card that they were offering? So they offered a card to the market. They said, hey, we'll do it on these terms. We're very transparent about it. The way in which they did it was say, we want to capture and encourage you, the user behavior, to onboard more of the subscription spend so that you can see that normal recurring process of getting MRR or monthly recurring revenue. Meaning like, hey, Brex can identify that. Great. That's the story they can tell. That's the story they can sell. And that's really where they get the growth. So it's a really fantastic thing. When I first joined, it was a company of roughly 200 or so when I joined, grew to about 1,000 by the time I left.
Hmm.
They had some real success in really driving that MRR growth to the point where this transaction categorization just was a beast. When I managed it and saw how well the engineers had developed this, it grew to the point where it was a mix between we are going to automate this as much as we can and accept the fact that we need humans still to overlay judgment on many of these so that it becomes a best in class categorization process. They incorporated everything in the first part of it to say, all right, we seize the MCC codes or whatever swipe is happening with cards, and it's going to tell us some piece of information. It's going to get overlaid by the bank who's going to categorize in some way. And they just accepted that there's going to be a lot of information that's just kind of how it is today, and then overlay their own algorithm to say, here's where we actually think it is, and telling us this kind of story. Then we're going to overlay human that says, I'm going to make certain judgments around this because if they spend at a coffee shop versus a lawyer, we're going to categorize that slightly different. And just because that coffee shop is on one corner and not the other corner, it could be categorized differently. And that's
Hmm.
the challenge is you need to have that backup in place a little bit. So I think they did a fantastic job really investing in that categorization space to really grow their business in a way that you could show that MRR growth. And that's others are doing the same thing. They do it different ways, tackle it from different angles. But still, like I think a great success story for what Brex was willing to do up front to invest in this kind of a growth pattern.
Yeah. What can those legacy financial institutions learn from how Brex builds and iterates on its underwriting technology?
I think there's a lot to learn from mostly the culture. While I don't think Brex necessarily has some sort of secret sauce around what or how or whatever it is, I think the culture of just decision making ended up being one of their strengths because of the fact that they were willing to explore a new option, explore a new opportunity. If it didn't quite work out, pivot from it. And I'll give an example of that I think demonstrates that culture difference from banks. You know, the fintech world really has a challenge in its funding reliance on capital markets. Rather than bank deposits, banks are just overwhelmed by having bank deposits, and that's their primary source of funding. But fintechs oftentimes are challenged by how they're funded based on a leveraged lender or whoever it is. So
Right.
one of the solutions that they said, hey, we realize this. Let's go and try and pivot to this new direction. Let's go get a bank charter ourselves. And so, as part of that new direction by the CEO, I was part of the team. We gathered a handful of folks, new and existing outside the company, to raise a side fund. And we started a growth capital loan fund as a proof of concept that we were going to take and transplant into this bank charter. We took that to say, hey, let's move this into with the FDIC to try and get improved stable funding. Great in the market. People look at this and say, you've got a bank. There's a lot of validity that goes with that, credibility that goes with that. Because the original idea was, hey, how do we solve for this problem? Ultimately, FDIC was likely going to decline that application. I was the chief credit officer on that application at the time, which is a little bit disappointing, but certainly not a surprise in many ways. The FDIC is conservative in many ways. But I think the moral of the story really is that they were aware of the challenges that kept them from scaling. And that's something that's difficult, I think, for a lot of banks to come across and accept that challenge
Yeah.
and then face it and try and learn from it, do something about it, challenge that status quo. And if they're wrong, then pivot to something else. And that's exactly what I think Brex has done well in many ways in their culture.
And that can be a really good example for those who are looking to scale or to build their businesses in that way. Are there other areas that you're seeing in culture, in company culture, that are just trends, whether good or bad, that are impacting the way people are doing business?
I think there's this concept that B2B is now B2C. I don't
Okay,
know how many people
expound.
kind of recognize that, or yeah, it's interesting to think about that way, but there really is this mindset shift in many ways for an entrepreneur, a CEO or founder that says, I'm still a person, I'm still a business that is run by people. And so I think as a lender, as somebody who's in the fintech space, you have to recognize it's still a company run by people. How do you
True.
how do you
Yeah.
scale it? How do you work with those people right? I'll give an example of a time I was lending to this software company. Had a great little tool. It was mostly around like timekeeping, great software. The founder in the end kind of didn't like how the product was designed and how we provided lending for her. And
Hmm.
she took it to social media and she complained about it. And to the point where it really was something that was almost libel. I mean, it violated our confidentiality agreement for one,
Okay.
but she's going on social media posting different things that were, I guess, it's kind of like the old Oscar Wilde quote, like the only thing worse than being talked about is not being talked about. Like
There
we
you
still
go.
got sort of PR still, I guess, right? But she went to it and she's a person and she went out and she complained about it. We addressed it. And I think a lot of fintechs are taking that approach, rightfully so, to say, how do I interact with my client, even though they're a business on any platform they or their employees choose to? Now, while some companies say, hey, you can't post anything about our business, most people, I think the more successful are embracing it and saying, hey, your company employees want to post about it and share things on Glassdoor, or LinkedIn, or social,
Yes.
Instagram, or wherever. And I think that's completely acceptable. And it's a trend I think that then businesses have the opportunity to start to gather that unstructured data, which I know is out there and we're using it as well in a way that we take that unstructured data and say, how happy are their employees? What are they
Hmm.
talking about? What kinds of things are they doing? What kinds of things are they saying? And if they're posting interesting articles or if they're in a podcast or a blog, what's happening there in that certain business unit? Is that an opportunity for me to have a different conversation with that company so that I can provide capital in a different way or a different service to them? So if we can take that unstructured data, because now it's no longer just B2B, it's B2C. If you can
Hmm.
take that new unstructured data and then provide that new service to them because you've extracted it and put it into a better way to make a decision around it, all the better for you. I think you're more successful and your competitors are doing it. So you you better do it.
You better do it. And, as you were talking about that, I was thinking this creates a level of transparency that you can't hide from, and nor should you want to. As a business, I would want to know what my employees are saying about the work environment, about situations that are happening, to be able to be proactive about it. And that's a unique circumstance that we find ourselves in these days, that throughout probably the history of time, we have not seen anything similar where everyone has a voice.
And if you're not embracing transparency, others are. And
For sure.
that's the
And
challenge.
that wins.
It's very true. It's
Yeah.
like the old African phrase, every morning a gazelle wakes up and it has to outrun the fastest lion. But every morning, a lion wakes up and knows it has to outrun the slowest gazelle or it will starve. It doesn't matter if you're a gazelle or a lion. When the sun comes up, you better start running.
Yeah, yeah. Let's talk little bit about the current landscape and what you see coming ahead. So, what innovations are on the horizon in commercial lending that you think will redefine the space?
I touched on it a bit there with the unstructured data. It's a real challenge for companies to deal with that. In the short term, the structured data really is still a solid opportunity for many fintechs to design products around or services around. So I think as an example of that, I'm thinking of a time when I was a lender to a software company that provided some home automation services. So they softwares just provided home automation in a way that clients, consumers could then manage anything they wanted to at home. Now this was interesting because at the time we were gathering from them purchase orders, statement of work, invoices, supporting documents, anything we needed when it came to notification with their customers so that we could finance those invoices. Very cumbersome data.
Mm.
That gathering process was just laborious. It was, painful for our customer even, let alone to
You
provide
don't
that.
miss those days.
Yeah, no, it was challenging. Nowadays, the thing people are doing, and if you're not, every fintech out there needs to be connecting to ERPs, the accounting systems, the platforms to gather that data in real time, OCR that data, and then verify it for a client within hours. It's really the short-term change that needs to happen that every CFO office needs to be thinking about, that kind of transparency. Because that speed of execution today is something that your lenders are thinking about, your clients are thinking about, your consumers, your CFOs are all thinking about how to do this. So that's really the short term I think on the horizon. From long term, I'm super excited about the massive amounts of tooling that are available to lenders nowadays. It's one thing for me, having lived overseas, speak a little bit of Chinese. It's another thing that I think every lender or person needs to know about how to speak the language of data. And that's, I think, the kind of the future of what needs to happen in fintech. Not everyone's an engineer. They don't have to be. Not everyone's a coder. Don't have to be necessarily. But AI is making so much more of that available, particularly with unstructured data, so that you can take large data sets, make sense of it more quickly, and be able to make better decisions on a product. If you're a product manager and in a launch for your latest sprint with your engineer, or even just design to understand, hey, I'm gathering all this feedback from people that are sharing their complaints about their latest box opening. Now, that's the kind of thing in the long run that I think everyone needs to be thinking about in the fintech space, and how to better assess that long-term tooling that they're looking at. What languages are you learning, and how are you best interacting with your clients and customers?
Yeah, thank you. And if you had the ability to go back in time and redesign the commercial lending system from scratch, what's the first thing that you would fix or rethink? If you could give advice to those who are looking to join the commercial lending industry, what advice would you give them?
As somebody who's just interested in the career, right?
Hmm.
Somebody who, how do I get in? How do I break into it?
Yeah.
There, there's clearly some basics for anybody to learn in your undergrad, in a graduate degree, really around reading and understanding accounting is kind of a big first step. That's just a building
Yeah.
block piece that anybody just has to understand. Whether you can code and write code yourself and query, fine, but you'll never know what to do if you're not really, as a lender, understanding the accounting mechanics behind it. So that's just a simple block and tackle piece that everybody has to get in this line of business.
Really
And that
foundational.
almost, yeah, it's really foundational. You're right. I think almost more importantly than that, to not lose sight in, is that there's such a massive human element to this piece of the business that you can't avoid developing people skills. You really have to be able to sit in front of a CFO and have a relationship with him or her and know what their fears are, what their challenges are, and put yourselves in their shoes. And these are like classic, like EQ kind of stuff. Like, instead of IQ, it's the EQ of really knowing
Yeah.
what they're facing, despite being able to read through the numbers. To be able to have that face-to-face conversation is essential for anybody to grow in this business. So that's what I'd recommend: is get your basics, understand the accounting and finance and other things just out there. That's something that you have to really make sure you've got a solid foundation for. But more so than that, there's the quantitative piece of it. Qualitatively, act with people, learn how to communicate, learn how to say hi and make a relationship,
Mhm.
deliver on things that are expectations, so that people know how to trust you.
And I like how you said learn how to, because let's be honest, a lot of times maybe those natural personable skills are in one skill set and then the math and accounting might be in another. So you're not going to have both of them. Or maybe it's less common for someone to come out the gate with both of those. And so take the time to really hone the one that is not so natural to you. You can learn it, you can refine it, and you can do really well in it.
Yeah,
So,
very
yeah,
true.
thank you, Eric. I appreciate you joining today and all the information that you shared with us. Thanks again.
It's been a pleasure. Thank you, Christy.
Thanks for watching our podcast today. I'm Kristen Nielsen. I'm the owner of Copper Canvas Ads Agency, and we partner with FinTechs to help them scale their business within a 12-month period. I've been in the industry for over 20 years, and I've seen how saturated the market can be, and therefore how difficult it can be to make your business stand out in a sea of other FinTechs that may look similar or maybe even slightly different. But how do you make yours stand out? How do you get your message to the right people and those with high buying intent? That's what Copper Canvas Ads Agency is here to do. We are a growth partner, and we take a deep dive into your business to really understand what your strong points are, where there may be areas of weakness, and how we can fill those areas of weakness. and create a plan to move forward in a strong way and really scale. So if you are interested, simply go to our website, coppercanvasadsagency.com, and schedule a time. There are buttons right there on the front page for you to book a time, and then we'll love to talk to you and see what we're able to do together.